Hello, guys, and welcome to the Johnson Finance Podcast. I do not know what to name it yet, but it's a start. If you don't know me, I used to do like these daily talk things in the past, and they would range anywhere from 10 minutes to 30 minutes of just me going on a tangent about things. And I want to bring that back, and this time I'm going to call it a podcast. And then maybe we could put it up on Spotify or iTunes, Apple Podcasts, whatever you call it. And hopefully you guys could hopefully you guys could find value from me talking. Or hopefully I could provide value to you guys. This is my first podcast in a while. It's been a while. It's very tough talking to myself. As many people know who make videos, it's tough because you're in a room and you're just talking to yourself. And hopefully it won't bore you to death. But I used to make these in the past, and they kind of got views. They only got views when I put Andrew Yang in the title. So that's all I did, is that I put Andrew Yang in the title, and these Yang Gang people would either come, and they would either love me or hate me for what I have to say about Andrew Yang. And that was in the past. But I just want to talk about a few things of what's going on now. For example, a couple days ago, the Federal Reserve came with their decision of them pretty much having 0% interest rates until 2023. And that is absolutely insane. But I mean, where else are they going to go at this point, right? Because we are so deep in debt, and because of these 0% rates, we're going to be in even deeper debt 3 years from now. It's going to be even worse, to the point where we can't even raise interest rates anymore. It's impossible. We are so much in debt that even the slightest uptick in interest rates will cause the stock market to crash, and no politician would want to go through that short-term pain for the long-term gain, because it'll look very bad politically, and you won't be reelected that way. So no politician wants to go through that pain, and we're just going to have 0% rates forever. One guy on Twitter was talking about the 0% rates and how insane it was, and I just said, wait until you see the negative rates in 2024. Because seriously, do not be shocked when these interest rates go into the negatives, because that's all they could do now. Where else are they going to go? It's impossible to raise rates. The debt has exploded because of this COVID crisis. So now what's going on is that the World Economic Forum is talking about a great reset, okay? And they kind of left this in a shroud of mystery. Not many people know what it is exactly, but there's a few things that I could tell you about it that I know what's going to happen from it. And this is kind of what I'm getting from Mike Mahoney. I believe that's his name. He's a big gold guy, gold buff. And from what I understand from this great reset that they're talking about, is what I know is that there's going to be a binary outcome. There are going to be winners and there are going to be losers. Most of the people are going to be losers because the average person will not be ready for what is about to come eventually. And that is the Great Reset. And basically, whether it's like a complete overhaul of everything that you would think of in not only America, but the entire globe. Okay? Basically, an overhaul in how energy works, an overhaul in how social communication works, and basically an overhaul on how the monetary system works. Like, I don't know if they're just going to somehow delete all this debt that has been built up somehow and just replace it with something completely new, maybe with like a federally backed cryptocurrency, something like that. And they're using a lot of this crazy technology to push this Great Reset agenda, is from what I understand. I do not know if private property is going to be gone. What I do know is that some of the people that I know, like Mike Mahoney, for example, he bought a farm, and basically he's going to be living off of that farm. So with whatever's coming, there's definitely going to be winners and losers, mostly losers, because a lot of people won't be prepared for what's coming, and it's going to be a complete overhaul on how things work. So, I mean, a few recommendations that I can make is that if the debt stays, I recommend people buying gold, specifically physical gold, because that is a guarantee appreciation to the weakness of the dollar, okay, and the weakness of other currencies as well. Because the majority of currencies, the vast majority, is a fiat currency, so there's no backing behind it. So that is where if the fiat currency gets weak, then gold will go up in price, because gold is a stable stable price pretty much. It doesn't change often. Okay. And another thing is that maybe you want to start farming on your own. Be prepared for mandatory food shortages, or not mandatory. It'd be controlled food shortages. I don't know how that's going to work, but again, we'll just have to wait and see what happens. Again, winners and losers. Hopefully, you could hedge and become a winner for what is about to come. But basically, this current system that we have, it's unsustainable. Everyone knows it is, especially the monetary system. And the Federal Reserve could only do so much with Keynesianism, because Keynesianism does not know how to combat stagflation. That's the one thing that Keynesianism cannot solve. It's impossible. It's stagflation. That's something you'd either have to wait out for a long period of time, which means a lot of pain for a long period of time, and not many politicians are willing to go through with it. So that's why they're much more willing to push through this great reset agenda. Okay? Because again, the current Keynesian system that we have is no longer working. It was never designed to work. It was designed to be only temporary, actually, and not to be this long-term thing of fueling bubbles and busting bubbles and fueling them again and busting them again, where each consecutive bubble becomes worse and worse, and where each burst becomes worse and worse after that. The entire system was supposed to be temporary, but again, it lasted all the way from the Great Depression until now, getting worse and worse as time goes on. The wealth gap becomes bigger and bigger and bigger. Again, the Keynesian system does not work. That is why I support the Austrian system, because that does work, where you would have to go through short-term pain for long-term gain through the use of capitalism and the free market and providing value to other people so you yourself could gain value in terms of money. That's how it should be. But again, it's not like that exactly. Not anymore, at least, especially with the Great Reset that's coming. Sorry about that. I had to take a drink. But that's something the World Economic Forum is trying to push, and some other globalist people. It is what it is. But again, we'll have to see what happens with that. I'd like to welcome you to this new podcast, though. Hopefully I become better at talking to myself. But, yeah, I'm sorry. I'm just shooting off some topics off the top of my head. But the Federal Reserve, and it's not only the Federal Reserve, it's also the other central banks, like the European central banks. They're all connected under the same umbrella, pretty much. And nothing can stop what's going to happen eventually. Nothing can stop it. Okay, it's this never-ending debt. And that's why they're trying to push this Great Reset. That's why you're seeing like the New York Times and other people starting to push this agenda. Okay, so that's one thing to think about. Anyway, stocks to look at, though, that you may want to invest in for the Great Reset. You can buy, if you don't want to buy physical gold, you can buy the index-funded gold, which is a ticker symbol GLD. You could also do Newmont, which is ticker symbol NEM. Or there are gold mining companies, too, that have a low amount of debt. So Barrick Gold and Yamana Gold may be other options as well that you could look at. So AUY and GOLD. And then technology is going to be big for what's coming. So Apple is probably going to be a good investment. Tesla's kind of overpriced in my opinion. But maybe it'd probably be best to just stick to an index fund for the technology sector. So QQQ is probably a good option there for you to just invest in, so that way you could have the entire technology sector instead of trying to pick and choose specific stocks. Another interesting thing I want to talk about is the Pfizer vaccine. It's funny that the vaccine came out and the stock sold off. It sold off like 2 days in a row. And you would think that Pfizer would go up because of the vaccine being released, that they were the first ones. But this is actually a perfect example of buy the rumor, sell the fact. So basically, Pfizer went up in anticipation of the vaccine being released. But that is just people buying the rumor. And then once it actually happens, once it is released, you sell on the fact. So Pfizer is currently selling off, and they're not exploding like what everyone thought was going to happen, because of buy the rumor, sell the fact. Okay, and that's something that could sneak up on a lot of people. For example, some people may buy calls the day before earnings, when the stock has already rallied for 2 weeks straight before the earnings, because it was already anticipating further earnings ahead of time. And then even if they had a good earnings, the stock would still sell off because of buy the rumor, sell the fact. Okay. And that, again, that could get a lot of people, and a lot of people are shocked, like, oh my God, they had a good earnings. Why did they tank? It's because it already went up 2 weeks ahead of time. So usually if the earnings is coming up, you may want to buy calls ahead of time, like 2 to 3 weeks ahead of time, pay the higher premium, okay, because volatility will go up the closer it gets to earnings, so you wouldn't lose as much value as you think from theta. And again, just be safe when buying options, of course. But that's just a suggestion right there, is that you want to buy into the rumor along with everyone else ahead of time, instead of being the one left with in the dust on the day of the earnings call, okay? So that's a few things I want to talk about. I mean, maybe military stocks would be good too. I don't know if the conquest for central banks all over the place ended or not yet, but I like military companies. I like Raytheon. I like Lockheed Martin. So those are probably some other good companies to invest in alongside with technology. Okay. Maybe Coca-Cola too. Maybe they would adapt, and they probably will. They have a lot of infrastructure in place. So, companies like that like for long-term investments, Coca-Cola, Apple, technology, military, all good investments. But again, we really don't know what's going to happen, okay? And we'll have to wait and see. And yeah. And just trying to figure out what to talk about, looking around. I mean, this is a new thing I'm starting. I'll make more notes for the next podcast, so I have more to talk about. But those are just a few things that I wanted to talk about. So I still think gold is the winning move as usual, because debt would always go up. It's impossible. We are never, ever going to pay it off, and it will only go up. And technology stocks will be the next thing after that. So thank you for listening, guys, and I hope you have a good day.